Caterpillar stock ticker CAT, is currently trading at $251.68 per share. Now, I released a stock analysis video on this company about 6 months ago, and I really liked what I saw, so I did add a position to my portfolio, and that investment has actually been the best performing investment in my dividend portfolio so far. If we come over here, you can see I'm actually up about 40% on that position. So if we jump back over to Seeking Alpha, we can see over the past 6 months, they're up about 38.46%, and over the past year, they are up 17.45%. So they performed really well during that time period. And there's also the expectations that we could see them perform really well in 2023 for a few different reasons. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Caterpillar and see if it's still a stock we should consider buying at its current trading price. We'll be looking at 4 different valuations. We'll look at Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model. And all of this will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come over here and plug in CAT and hit enter. And you can see all of this data will automatically load in. Now we're currently looking at a 1-year chart. So again, I bought it in a price somewhere around here, and we saw a huge run up in the price since then. If we come over here and look at the dividend data, we can see they're currently paying about $4.80 per share, giving them a dividend yield of close to 2%. So not a super high starting dividend yield, but as we'll see later in the video, the dividend growth has been really good. Now the payout ratio is currently sitting at about 32.7%. But let's go ahead and jump over to Seeking Alpha and dig into this dividend data just a little bit more. We can see Seeking Alpha does give them good dividend grades with their safety, growth, yield, and consistency. Let's go ahead and look at the dividend history. One of the things I do like to look at, we can see they have 29 consecutive years of dividend growth. That is really good track record, making them a dividend aristocrat, and 33 years of consecutive dividend payments. Let's go ahead and scroll down. If we look at the last 10 years, we can see about 10 years ago, they were paying out 52 cents per share quarterly. Jump forward to now, that is more than double. They're now paying out $1.20 quarterly. So again, yes, that is really good dividend growth. So despite the low starting dividend yield, you will see good dividend growth out of this company very likely. Come over here, we can see analysts currently have a target price of $239 per share, actually a little bit lower than that current trading price. So I guess some people do think the company's slightly overvalued at its current price. Institutional ownership around 71% and a beta of 1.11. So you will see a little bit more volatility than that of the market. But let's go ahead and jump over and look at Graham's valuation. And we can see the formula Benjamin Graham laid out for us to calculate intrinsic value. So we plug in our earnings per share for Caterpillar, we apply our growth rate projection, and plug in the current yield on AAA corporate bonds. And at the time of this video, it's sitting at 4.19. And once we've done all of that, you can see we come to an intrinsic value of $274.54 per share, a little bit higher than that current trading price. Let's go ahead and move forward and look at our discounted cash flow model. In order to perform this model, we need to project a growth rate to the future free cash flows for the company. So you can see I plugged in the historical free cash flow for this company, and we can see they had an average growth rate of about 11.4%. So I'm going to stay consistent with that growth rate and project a growth rate of about 12% moving forward. That's pretty close to a lot of analysts' expectations. So I projected that to the future free cash flows and the terminal value, which is the sum of the future free cash flows past the year 2030. I then found the present value of those future free cash flows and added them together here. Added the company's cash and cash equivalents, subtracted out the total debt to get their equity value. I then divided by the shares outstanding, and this gave me a discounted cash flow price per share of $276.78, really close to what we got for Graham's valuation actually. Let's go ahead and move forward and look at our next valuation, which will be the multiples valuation. So essentially what we're doing, we're taking companies that are similar in structure to Caterpillar and seeing how the market is valuing them using a price to earnings multiple. So you can see the comparable companies here. We're taking their stock price, dividing by the earnings per share to get their price to earnings multiple. Once we have that number, we take the average price to earnings multiple, multiply by Caterpillar's earnings per share, and this gives us an intrinsic value of $187, which is actually quite a bit lower than the current trading price for this company. So what exactly does that mean? Well, we can see the average price to earnings for these comparable companies, like we just mentioned, 14.46. If we jump back over to our stock screener, we can see Caterpillar's current price to earnings is 18.29. So the market is definitely valuing this company at a higher level than these comparable companies. So sometimes that is an indicator that the company is trading at a higher valuation than it should, but sometimes you could argue that it is justified. I think Caterpillar, you could make the argument that this is one of those situations. let's go ahead and jump over to our dividend discount model. So essentially what I've done is I plugged in the quarterly dividend payouts so we can see our yearly dividend payouts, and this allows us to see our year-over-year growth rates. So the average growth rate was around 9% for their dividend payouts. Moving forward, I'm projecting a 7% dividend growth rate. Anytime you have a high dividend growth rate, there is two things you want to glance at. You want to look at that free cash flow growth. If you're expecting good free cash flow growth, then that dividend growth rate should be safe, but you also want to check that payout ratio, and like we mentioned earlier, they do have a very safe payout ratio. So that dividend growth rate is sustainable. After applying a discount rate of 9%, we come to a dividend discount model price per share of $256.80, pretty close to that current trading price. Let's jump over to our output tab, and we'll see all four of our valuation models: Grams at 274, discounted cash flow at 276, multiples at 187, and dividend discount model at 256. And when we average all four of these together, we come to an intrinsic value of $248.80 per share. That is very close to the current trading price for this company. Now, like I mentioned with the multiples valuation, I think you could make the argument that it's fair that they trade at a higher price to earnings multiple than some of these other companies. So I think some people would argue that this isn't a fair valuation. So if you do take it out, you come to an intrinsic value of $269.37. So the current trading price for the company at $251, let's go ahead and apply an aggressive margin of safety. We'll say 10%. Based upon that, the acceptable buy price is around $242.44. Let's say we apply a 30% margin of safety. Our acceptable buy price would be around $188.56, which is actually pretty close to the price that I bought in at 6 months ago. So at its current trading price, it's definitely not quite as attractive, but you have to keep in mind with companies like this, there are opportunities. If we look at the past year, you can see right here, there's a huge opportunity, and it led to really good short-term results for me. And while I don't invest for short-term results, it is really cool to see an investment like this pay off so quickly. But more importantly, I think this is a company that will allow me to achieve my long-term goal of being able to live off of dividend income. Not a super great starting dividend yield, but their dividend growth history is really good, and I think they'll be able to continue to sustain a high dividend growth rate, which will again, I know long-term allow me to live off of dividends. So at its current price, definitely not quite as attractive, but if you see it dip down, I would definitely suggest you look into taking advantage of that opportunity. So there you go. There's an analysis on Caterpillar stock. Go ahead and let me know what you think of this company down below. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Seeking Alpha is also offering a 50% off discount at my link in the description. That's a tool that I use in nearly every single one of my videos. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.